Okay, what's going on everybody? Welcome to another video. In this video, I want to show you how to build a perfect trading plan for 2025. So basically, like without clear trading plan, you cannot see consistent results. You can win one trade, you can win two trades, but you will not see your equity curve going something like this because you don't have a trading plan, you trade in randomly, you are gambling at this point. So you will see your equity curve maybe at the start going somewhere like this, then like this, and then going slowly but surely down, because you have to be consistent with your approach. You need to treat trading as a business, not as a casino. So if you look what we got here, I wrote this trading plan for you, and I will explain what this all things exactly means. So the first we got asset, right? With asset, for me, I'm trading gold and I'm trading EU. If you guys see me trading gold, that doesn't mean you're gonna start to trade gold. If you guys see other influencer trading Nasdaq, that doesn't mean you guys start to trade Nasdaq. These assets you need to have tested exactly for your strategy, what works best for your strategy, because I know my strategy works the best on gold and on EU, and for example on Nasdaq or US 30 it doesn't work that good, so I stick to gold and EU. Your guys' strategy can be completely different, but that's the point. You need to have these things tested always. So pick your asset. Let's say you decide to trade GBP, JPY. Pick your asset, go on backtesting, test like 100, 200 setups, and like same rules, same strategy, test it. If you got positive results, you can trade it. But other than that, no, you have to stick to the pair which you get tested. Simple as that. Time for me is NY session. Why NY session? Because I'm trading gold, which moves most in NY session, and I'm trading euro dollar, which also moves the most in New York session. For you guys, let's say you pick Nasdaq. You cannot trade Nasdaq in London. You cannot trade Nasdaq in Asia. There is gonna be no movement, because let's say you pick Nasdaq, US 30 or S&P, whatever. The movement, let's put it in 3 session, right here. Let's say this is Asia, this is London, and this is NY, right? With Nasdaq, the price action is going to be something like this. No momentum at all, little bit of momentum. It's creating some type of a range. Go down, go up. And New York will do something like this. Which one of these 3 price sections you want to trade? New York session, right? Because that's the most volume. So based on your asset, you have to pick your time. If you are trading AUD JPY, you don't want to trade like, you can trade London, but AUD JPY will mostly move at Asian and London. So you want to optimize your time, your trading session based on your asset. You can trade all the session, but for me, NY session works the best, so I stick only to NY session. And same with asset, guys. You need to have it tested. Let's say you're gonna test your pair, and you will see in Asia you will have 40% win rate. In London you will have 60, and in New York you will have 15, let's say. So in this case, why stick to New York session? if you can stick only to London and maybe to Asia to have in total 50% win rate, than to risk it with a 15% win rate in New York. Doesn't make sense. So pick your session and time wisely. Okay. Bias. So for me, I trade only with the trend. So I trade only bullish when I'm trading only buys when market is bullish, and I'm trading sells when market is bearish. That's for me. But I have to be 100% clear with my bias. Like if I go to the day and let's say I'm not exactly sure what, I don't know. Let's say this is like, look, this is clear as the bull market, right? On gold. But if I go on a day and let's say I'm trading this price action, I don't know what is going to happen because we are in a bear market, but right now we are breaking levels of resistance. So at this market structure, what I'm going to do is I'm going to stay away and I'm not going to trade it until market will give me clear break or clear transition in structure and I'm 100% sure in my bias. Okay, so next we got confluences, what I'm looking for. So for me is, as I said, it's a trend. It's some type of levels. It's FIBs. It's candles. It's also timing. What is trends, levels, FIBs, candles, timing, momentum also. You know, I have multiple confluences. It depends on you. You know, like I trade this way because it works for me, you know. Also, one of my confluences is liquidity, but whatever. You can trade, like, depend how you are trading. You're gonna be basing your confluences based on your strategy, you know. So if you are, let's say, trading based on liquidity, you're not gonna care about some candles or some FIBs, you know. Your main thing is gonna be liquidity, supply, demand, order block, whatever. If you are trading like, let's say, swing trading, your main confluence is gonna be news, like what the market sentiment is saying, and etc. Like, all depends on your strategy. But for me, I know if I have at least, let's say, trend, I have level, and I have candle, I have good timing, at least four confluences for me, I can enter the trade. If I have 3, I cannot enter the trade because the probability of me winning is going down. Another thing, we got a risk to reward ratio. For me, it's at least 1.2 risk to reward. I don't take trades which is less than 1.2 risk to reward. Again, I tested it, I know this works for me the best, so I stick to it. My average risk to reward is like 1.2, 1.5 to 1. That doesn't mean for your strategy you cannot trade 1 to 1. You cannot trade 1 to 1.5. I'm saying that what is working best for me, and I'm sticking to it. But again, you have to test it, what suits best for your strategy. Because let's say if somebody got average of 5R, his win rate is not going to be 80%. You know, his win rate is going to be, let's say, 40%. But yeah, he's from 10 trade, he's gonna win only 4, but the gain is gonna be way higher than the losses. Let's say somebody like me have risk reward average like 2.4 and 2.5, something like this, risk to reward, and my win rate, like if I have 30% win rate, my strategy is not good, right? So my win rate is 60%, which means I win 6 out of 10 trades, but my risk reward is 2.5 for 2.5, which means I'm profitable in the long run. So with the risk reward, you have to like optimize it exactly for a strategy, what suits you the best. Test it again, 100, 200 setups, and what works for best for you, you have to stick to it. Okay, here we got stop loss placement and take profit. So for me, my stop loss placements have to be always above some level. Why? Because my strategy is based on key levels and based on market structure, right? So if I'm taking a trade, I'm taking a trade on some key level, and I know if price breaks some type of a key level, it most likely goes to another key level. So let's say if we go to the charts and let's say, I don't know, I have a key level here and I have a key level, let's say like this, yeah? And we can do this key level also. Whatever, just example, right? Let's say I'm looking to take a short position, okay? So let's say price goes here, break it, retest it right here. Let's say I'm entering right here. If I put my stop loss, let's say just for sake, right? Let's say if I put it like this, I would get stopped out. If I put it on the level, you know, if I put it on the level, I would get stopped out. So that's why I'm always putting it above the level or under the level, depend where are we trading. Because as I said, if I take sell, let's say right here, I'm gonna put it right here because I think and I know most likely if price breaks some type of a key level and retested it, I know it's usually come to another key level. So instead of me putting the stop loss right here, I know the second key level which I got is right here. So instead of me putting right here, I will put it slightly above this key level, this high, for me to maximize my profits to down here, because I know if price break it, retest it, it's most likely gonna travel to the next key level. So that's my stop loss placement. And for you guys, as usual, it's gonna be different because depending on your strategy. So my stop loss level is always above some key level. You can have it like, let's say 50 pips every trade, like strict 50 pips. You can have it strict 100 pips. You can have it strict under the wick, strict under the body, above the body, above the wick. It depends on your strategy and what you got tested again. So that's with a stop loss, and with TP, as I said, at least 1 to 2, which is the risk to reward, or key level. I'm always targeting at least 1 to 2. If we are, let's say, if gold is trending at all-time high, and I have no key level to target, I'm targeting 1 to 2. Okay, but if we trade in somewhere right here on gold, let's say, I don't know, let's say I will buy gold right here, you know, with a stop loss under the zone, always under the zone. So what I'm gonna target, the next key level, which in this point will be right here, and it's not 2 times my risk, so I'm gonna target 2 times my risk, which is right here. And it's always like that. So I'm always targeting some key level, or at least 1 to 2. If the key level is 1 to 3, I'm targeting 1 to 3. If the key level is 1 to 4, I'm targeting 1 to 4. Okay, now the last thing what I got in my plan is new trading. For me, again, I don't like to trade before major news. Do not trade before major news, but after. But after, let's say 30 minutes or an hour, I can take a trade, because what works for me, I usually see the real movement happening like 30 minutes or 1 hour after the news. So I'm not trading before the news, I'm trading only after the major news, which is CPI, PPI, NFP, FOMC, and only these high impact news, you know. But if I'm at the trade before the news, and let's say, I don't know, okay, let's say I'm at this buy, just for sake, with a stop loss here, target here, and let's say price is going right here, and price is at this point before big news. What I'm gonna do is I'm gonna set my stop loss to break even. So in this case, I would have got break even, but I don't want to risk it, because the news can do something like this, you know. So I'd rather take break even, wait for some pool of liquidity, then wait for some type of a formation, and then go up again. So if I'm in a trade before news, always at break even. If I'm at a deep profit before major news, I'm securing at least 50% of my position. And again, that is something you need to have tested. Maybe for you it will work. You can, maybe you know how to trade news, so you will trade news. It again depending on you and on your strategy.